Well, excitement was building on a Friday when announcements came out of Washington, D.C. in regards to the RVOs. Hello, once again. I'm Susan Littlefield with the American Ag Network. To break it all down and what it means to our marketplace, I'm excited to bring in Mike Zuzolo. Mike is with Global Commodity Analytics. And Mike, I think from the get go, when word was released that we actually had some numbers in place, a bit of excitement started to build.
A lot more than a bid is that we get ready to hit the airwaves here, Susan. We're still limit bid in the both July and December soybean oil at about 3 cents a pound. Chicago Mercantile Exchange will expand those limits to 4.5 cents if we're still at a limit bid or limit offer on Friday's close. And what a time to have this news come out in the light of the WASDE report bringing us a fresh record high soybean ending stocks number for the world of 125.3 million metric tons on Thursday's report. And we went, as you say, so appropriately, excitement on Friday, but we were in literal fear, I think, on Thursday, as some news wires, one in particular, was reporting the EPA was going to recommend to the USDA White House only 5.25 billion gallons for a 2026 biomass biodiesel blend. We got 5.61 for 2026. That compares to just under 5.4 this year, a big jump. And then it goes even harder to the upside in terms of 2027 with, I think, a 5.86 billion gallon blend as well that next year. So very welcome news. And as you say, we went from essentially fear on Thursday to extreme excitement on Friday, very much needed because we need to replace any lost export demand in soybeans with domestic demand, whether it's bean oil for biodiesel or bean meal with our livestock sector.
So going forward, Mike, what does this mean for agriculture, specifically as we look at the way the soybeans have been trading?
Yeah, I think this is where supply demand wise, there was no question in my mind that soybeans had the worst supply demand situation of the three majors, especially after the WASDE report, even with a sub 300 million bushel carryover. My take, Susan, is that USDA is too high on soybean exports for 25, 26, but this can help mitigate it. So I'm at about 500 million bushel carryover for soybeans in 25, 26 with a little bit lower yield than where USDA is right now. Even with that, if we continue to keep the trade pause in place, as far as the tariff pause with China, I can start inching those exports up. But it gives us the chance to stay below 400 million bushels in terms of ending stocks for the 25, 26 marketing year would be my first guess. Haven't run a lot of numbers yet since this is so brand new, but that seems to be kind of a toggle point for me is can we stay below 400 million? And then we'll have to watch to see what the basis does. One of the big things that happened on Thursday that brought so much fear was Central Illinois, Central Indiana saw a widespread basis shift from July beans to November, and it crushed the basis from a plus 20, 25 to a negative 20, 25 in certain locations. And then this ran from Central Illinois all the way into Central Indiana, from what I could tell. That was directly related to the negative crush margins and fear about the biofuel policy. I want to see if those basis levels come back now and come back sharply. That would be a good indication that our cash market's still back and coming back nicely.
Well, and this is definitely going to be exciting news, especially as we see the continued pressure coming out of South America and their production numbers.
It really is. And I think this is where President Trump's administration has been very clear in what they want to do. They want to bring manufacturing back here to the United States. They don't mind the tariffs. In fact, the USTR was on a Fox program Thursday afternoon and said pretty much verbatim, the president likes the tariffs. He wants the tariffs. They want to rebuild manufacturing here in this country, but they realize that the farmer base, the agriculture base, has got to be protected as much as possible. This is a big win, I think, for the agriculture base. It's also a big win for the taxpayer and also for the climate. Instead of having a lot of direct payments, this could help ensure profitability at market-driven prices and supply demand levels. That's really important to the farmer. It's really important to people like you and I as well.
Well, wonderful, Mike. Thanks for joining us today to talk more about the RVOs and what we're going to see moving forward.
You bet. Thanks, Susan, for having me.
Of course, joining us today is Mike Zuzolo. Mike is with Global Commodity Analytics, giving us a breakdown as to what this announcement all means. I'm Susan Littlefield.